Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Okay, we're back again. Another fantastic, interesting discussion here on Fintech Daydreaming. As always, I'm Paul Krogdahl, and it wouldn't be Fintech Daydreaming without my fantastic partner in fintech and podcasting, Ville Sointu. How are you doing today, Ville?
Good as always. How about you, Paul?
I'm really good. I'm really excited. I wonder, actually, Ville, how many subscriptions have you got?
Subscriptions? Oh, yeah. I guess the answer here is that I should definitely know, but honestly, I don't. I guess the word that I would use is too many. But
yeah, I was thinking about this yesterday and this morning as we were getting ready for this podcast, and I sort of started with the usual Netflix, Spotify. Then I started thinking, I've got some subscriptions to some of the cloud providers, Microsoft. Are they subscriptions? Then I started thinking about, news outlets, and then you come to this sort of point of, how do I pay for them? And am I paying for them? And am I paying for subscriptions that I've just forgotten exist and everything else? And I know exactly the guy that can help us with this question, right? And that's Joakim, who is with us here today. So Joakim, welcome to the show. It's fantastic to have you with us. I wonder, for the general listeners out there, why don't you give us very quickly, who is Joakim? Where does Joakim come from? We know secretly you're half Finnish, so that's cool. And what makes you you?
All right, that's a wide question, Paul. First of all, thank you for having me. I am a Swedish person, half Finnish mentioned, born and raised in the northern parts, and been running tech ventures for the past 11 years and spent the past 7 years in fintech. I have a habit of seeing problems, and I like to see myself as a doer. So collecting good people around a common purpose to make a difference. And if you can change something historical of how things used to work to actually challenge the status quo and take it into a new reality, it's one of my big drivers. It's fun to be provocative and change the status quo.
That's fantastic. I mean, I've got to admit, I want to see myself in the same sort of area as you, entrepreneur and innovative and everything else. And I'm sitting here coming on 25 years in the corporate world. But I've had one or two small startups that I've kicked up and got running and then failed very quickly. I don't know, can we ask, how many startups have you got under your belt and how many of them have been successful?
So Minna Technologies, which we're currently running, is my third one. My first company I started in 2011, and I worked with physical data recovery. So if the lightning struck or if you spilled coffee on your computer, I was there to save your hard drive, basically. But in 2013, iCloud and Google Drive and all the other softwares came to market, and the backup went into the cloud, and I went out of business. Yeah. So I usually say that is the most expensive education I made, but it's a great learning.
Yeah. Okay, so tell us a little bit about Minna Technologies. That's why you're here. This whole idea around subscription management and the collaboration with the banks in this area.
Well, first of all, I think your introduction was spot on. What we witnessed already back in 2014, so doing a trip down memory lane now, was that consumers started to subscribe to both products and services instead of actually buying them. So you have the obvious examples that none of us buy CDs or DVDs anymore, but most of us have access to Spotify, Netflix, or Apple Music, or anything in between. And if we look back at the year of 2020, when a lot of people were stuck at home due to the pandemic, we started to subscribe to everything high and low, subscribing to groceries, to razor blades, to diapers, and you can even see more durable goods such as cars now being sold in a subscription model. Yeah. And that's a two-sided market pull, because the market also put a higher valuation on recurring revenue. So Volvo, Audi, BMW, Porsche, even Apple are trying to sell hardware on a recurring model because it's more profitable.
Yeah. Okay, and how do you then interact with the banks? I understand that you've got some fantastic collaborations with some of the Nordic banks.
It's a fair question. And It's worth to mention that we started Minna as a direct B2C company. So we had our own application that consumers could download to manage the recurring payments. But we realized quite quickly that it's not only the consumer who pays for the party, so to speak. The biggest cost that anyone acquires in this industry is the financial institution themselves. So consumers that have a lot of subscriptions, they tend to raise more disputes, and they do tend to call their bank more often. So what would happen if your son, your daughter, your husband, your wife use your bank card to sign up for PlayStation Plus or Xbox Gold? You have a subscription, but you don't even have the password. In such a case, you will rely on your bank to stop it for you.
Yeah.
And there was a 40% increase between 2019 and 2020 in subscription-related support tickets. So we really helped the bank to cut their operational costs by allowing for subscription management to happen by the user themselves instead of calling support.
Do you have a lot of competition in this space, or is Minna the one and only?
Of course, it's a growing space. So when we started in 2014, I think we found 2 or 3 companies in the world in this universe. And today that number is 25 or 30. The vast majority of them are direct B2C companies, just as we started. So a big part of the value proposition is that we are designed for enterprise customers. So all of our products are API-based, white labeled, and integrated inside the bank themselves, meaning that we put a lot of effort into IT security, compliance, PCI DSS certifications, ISO standards. So whatever the customer would expect from a software vendor, and that's kind of a big investment.
What do you think the future is of subscription-based services?
Well, you can just look at the data, and the trend is still going upwards. So if you want to believe McKinsey and the others, if you go back to 2007, the common subscriptions that people had were maybe your telco bill, your energy bill, a couple of insurances on a direct debit structure. And then looking at 2020, you have your online entertainment, your newspapers, your cloud storage, everything on a digital subscription. And come 2025, it's forecasted that consumers will stop buying cars. A big portion of consumers will subscribe to access to a car instead of owning the asset. Because if you look at car ownership, the asset is declining in value anyways, and the purpose is for you to go from A to B. So why should you own the asset? And that might have a big impact on the financial industry as a whole, because your need for credit products will go down if you subscribe instead of buy.
Absolutely, yeah. What's your view on all of this, Ville?
Yeah, I think it's an interesting trend for sure. I mean, we obviously been seeing the major growth in the subscription economy in general, basically just doing monthly payments instead of paying everything for everything up front, or kind of just paying for something that you want and you keep it forever. I do wonder, however, what's the kind of next stage in subscription kind of based business models? We are more and more seeing, like you mentioned, for example, these manufacturers selling their hardware as a service. So you kind of pay a fixed monthly fee. But in my mind, when we are talking about hardware that you can then measure, and then you could actually see move towards beyond subscription to pay per use. So basically you just pay exactly what you use and nothing more, nothing less. Have you been observing similar trends at Minna?
Absolutely, and I think you're spot on. So the first generation of subscriptions are flat fee. So you pay $9 or €9 for Spotify and you listen to as much as you want, or for Audible or any other service. I think you need to go into some form of a usage-based element in this. So it's different if I consume 1 audiobook per month or 5 audiobooks per month. I'm somewhat of a premium user, and that should be reflected in the pricing. And you can see some of companies going a little bit in this direction. So if you look at Slack, the corporate communication app, if you don't sign in for 60 days, they will actually kill your subscription automatically. Netflix have the same, but I think they have it 13 months. So these subscription companies are starting to consider how much you use the service and base the model on that. And I think that will become much more common.
But it's interesting. I mean, I'm wondering, is consumption-based models the same as a subscription-based model? Do they get managed the same way? If there's no monthly fee, it's just based upon my consumption. Is the subscription managed in the same way?
So it really depends on how you define a subscription, right?
Yeah.
So the big difference from a transactional model is that the payment itself is automated. So you have a company that has the rights to debit you on a recurring basis. And how much they debit you will change. And you have one category that is very explicit in this, which is the energy world. Your energy bill is actually a subscription, but your usage will define how much you actually pay.
So is your mobile phone, I guess. So you kind of have a fixed fee, and then you have this pay-per-use element into it. And I think, Paul, to answer from my perspective, it's really the contractual relationship that you have, which is called a subscription. And then the pricing element there has perhaps a fixed element and a pay-per-use element. And it's an interesting kind of connection there. But moving on, actually, this might be maybe a stretch too far, but this reminds me of a discussion we had in the previous episode of our podcast, which was on the buy now, pay later type of schemes. Now, that kind of boils down into a mini subscription, if you want to look at it from that perspective, because if you buy an item, then you pay it over 6 months, for example, then you pay a fixed monthly fee, kind of a subscription for that particular thing you just bought. How do you see at Minna? Do you see is buy now, pay later, or this kind of installment payments? Do you view them as kind of a subscription, or is it something completely different from your standpoint?
I think the BNPL as a whole phenomenon is a beautified credit product. So you have someone in between who helps you split payments with money you don't have.
Yeah.
And in the end, you are still owning the asset. You are not subscribing to access the asset. You're actually owning the product. So we don't define it as a subscription, even if the payment model with that middleman is a recurring payment, sure. But you don't have a contract with the vendor itself. You have a middleman who helps you with the payment.
Great. Thanks for clarifying that definition for our listeners and us.
No, that's actually very good. And I'd like to stay for a couple of minutes on this whole subject. You started moving towards the area of regulatory compliance there, Ville. I mean, you're working quite a lot with the banks and focusing in on the banks. How are you finding it working as a fintech in this sort of big world of regulated industry with the banks, traditional banks, regulators? It's an interesting sort of threesome there, right?
Well, we can spend the full episode on this topic. And I started selling to banks when I was 23 years old. So
right.
If you were to go to a bank in 2014 and say, hey, I got a great idea to build a new product, I just need to read your data, they would throw you out of a window. And something happened around 2016 and 2017 with the legislation of PSD2 and open banking. And suddenly the red tape became red carpet. So I think the attitude for the incumbents to collaborate is way more mature now, partly driven by the competition. So looking at the Monzos and the Revoluts and the N26, they are stealing market share day by day. And the urgency is higher for the incumbent to stay relevant.
Ville, have you thrown many fintechs out the window?
I joined Nordea in 2017, so luckily I didn't have to. But yeah, for sure. We've been talking about this kind of partnership angle many times before, and I completely agree. The attitude has changed significantly over the past 5-6 years in the Nordic banks, at least. I think partners and fintechs are seen as a kind of complementary asset to banks, basically focusing on things that the banks are either not good at doing themselves or something that might be maybe too narrow for them to focus significant resources to. So it just makes sense to kind of have a win-win relationship with fintech partners. So yeah, I absolutely agree to that kind of observation on the bank attitudes.
And I think we're going to see that grow more and more as we go forwards as well.
Absolutely, yes.
Yeah.
Build or buy is a very common discussion, right? It's a decision you always need to take. And the attitude to actually buy from someone who's deep in their niche is better, because there are so many niche deep fintech players right now that if a bank were to replicate them and build this in-house, it will not be profitable or sustainable at all. So if you have niche partners, it's better than build.
And I think that's actually a fundamental shift we're seeing in the industry. If we go back a couple of years, maybe 5-10 years, the banks were very focused on build, right? A lot of banks were walking around saying we are an IT company with a banking license. And I think we are seeing a fundamental shift now where the banks are realizing they want to focus on what is their competitive advantage, and everything else they will buy it in as a subscription model or a product, or very much this move towards software as a service, platform as a service.
But it's the definition of an IT company as well. So I can actually support banks who make that statement that we're an IT company with a banking license. But a modern IT company is about connectivity with the ecosystem. So you don't have a modern IT company that is not API based, for example. So a really good IT-based bank will have that platform approach with multiple connectivity points with value-added services. Being an IT company do not mean that you build everything yourself. It means that you connect the different value-added pieces.
Yes. We're back to my famous saying, Ville, right? The future of banking will be dominated by platforms.
Yeah, absolutely. But that being said, I do have to bring up another angle, which we're kind of seeing right now in this kind of bank and fintech partnerships, which is that it used to be so just a few years ago that if you are a fintech and then you go to a bank and then you effectively expect the bank to pay you a lot of money to upfront to be part of the kind of banking portfolio, which kind of made sense back at the day. But now that we're seeing more and more mature fintech companies creating their own services and their own service propositions, I'm actually curious to see if we're going to actually move to a model where banks can really act as a distributor rather than an investor in the fintech space, and you could actually do risk and revenue share models in a much more kind of a collaborative way, so that the relationship is not kind of one way in a sense that the fintech becomes almost like a vendor relationship, but rather a real partner, a business partnership. And this could be a new way for banks and fintechs to work together for sure. And I really hope that this is also the reality on the ground moving forward.
I couldn't agree more with everything you just said, Ville. So if we put this in 3 horizons, when PSD2 came, it was a regulatory initiative. It became an infrastructure investment from the bank to provide the interfaces. All right. Second wave was some form of a rush of urgency that, oh, we need to buy this for innovation and brand purposes. But now we are in a much more mature state where unless you have a profitable case ROI for the bank itself, there's no reason to enter a partnership. So I fully agree with the trend. And that is also why we focus now on what's the actual business impact we give. Yes, we do solve the problem for the retail customer, but that's not how we measure success. We measure success on how many phone calls do we avoid, or how many disputes do we avoid? How much do we reduce the operational cost? Yeah. That's the reason to buy, not for innovation and happy customers.
Yeah. And with that in mind, was it a week or so ago, you guys made an announcement that you're expanding into the UK market. So tell us about that. How did that come about and how's it going?
It was a little bit of a delayed announcement. So we actually launched our first UK office in March 2020, which was a great timing because it was 2 weeks ahead of the pandemic.
Yeah, yes.
So it really didn't take off because we had a work from home policy like everyone else. But now we're starting to get a proper structure and we just decided to present it to the market. And one of our biggest customers is Lloyds Banking Group in the UK. So it serves a purpose to be locally present. We also have Visa as one of our investors who have their European headquarters in London.
So where next? World domination?
US. I am actually moving myself. I was scheduled to move last week, so mid-October, but the embassy is still closed due to COVID. So I'm looking at early next year.
Fantastic. Have you already got opportunities in the US?
Absolutely. So we raised our Series B in January this year, and a big portion of that money is earmarked for the US expansion. So I've been working with the US market since March, so I work evenings nowadays.
Yeah. I know that feeling. I have a global role, so I get up early in the morning for APAC and I go to bed late at night because of the US. So I know exactly how that feels.
The only benefit is that you get the opportunity to wake up to positive emails, so you can get a good start from time to time.
That's true. Yes, I agree with that. But I'd like to change tact a little bit, if that's okay with you. You are an entrepreneur. You're working as a startup entrepreneur, starting in Sweden. Being a predominantly Nordic podcast, we want to try and motivate as much innovation and fintech startup in the Nordics. What would be your recommendation, your advice, how to get started and off the ground to all of these fantastic young entrepreneurs out there who want to follow in your footsteps?
So the first thing I would consider is your business model. If you're going direct to consumer or business to business, it will have a big impact on what you need to do first and how much funding you need to execute on that.
Mm-hmm.
So when we started working with banks, we were 15 people in the company, and running a diligence process with a bank as a team of 15 people or just getting your EBA authorization is borderline impossible. So make sure that you have enough runway and stability if you want to take the B2B route, because the sales process to a bank is 12, 18, maybe 24 months. And then you have a 6 months integration project, and then you might realize revenue 2.5 years after you started working with that partner. So really take care of your cash burn and make sure that your investors have the same long-term perspective as you have. If you're going B2C, I think the Nordic market by design is slightly too small. So looking at the success cases from the Nordics, the Isadals, the Klarnas, the Tink, for example, they didn't reach their escape velocity, so to speak, where the company had a high momentum by doing business in the Nordics. It's a great playground for product market fit, but put your strategy early for where the big market is.
We very often hear it said that the Nordics is very advanced when it comes to digital capabilities, digital natives, etc. Do you see that as an advantage or a disadvantage when you're trying to start a fintech company?
I think it's been a great evidence or a support for us. So if you look at Swedbank, for example, they took the decision to integrate our product in 2017. And now you can see that, for example, the middle part of Europe or continental Europe is ready for this kind of partnership. So if you start in the Nordics, you are ahead of the curve and you are more ready from a product perspective when the rest of Europe actually follows. So I think it's great to be at the beginning of the curve instead of being too late to the party.
Right, yeah.
How do you see the VC landscape here in the Nordics? I mean, do you actually have to go get funding from outside the Nordics, or do you think that the Nordic market is actually mature enough to understand fintech investments early stage?
So two factors, ticket size and investment thesis. So if you're doing a metric raise, so you can actually show that you have a good customer acquisition rate and you have a good revenue growth, you have money available in Europe and even in the Nordics. If you have more of a big investment that you want to be a category leader and change the status quo, you are raising bigger tickets much more on a future state and a story and a narrative. And I see that European venture capitalists, maybe with a few UK exceptions, are too metric driven. It's hard to raise the big tickets to make the big impact in Nordics and in Europe.
So is the US a better marketplace for that, do you think?
If you have those super big ambitions that you want to make a change and challenge an incumbent, let's take an easy example. If you want to change payment processing, you want to replace Visa and MasterCard, well, you will need to raise 100 million without any evidence of succeeding. But the return, if you succeed, is 1000x.
Yeah.
European investors will not take that risk model, while you might find that opportunity in the US.
Yeah. Okay.
And have you seen any European fintechs doing those types of raises, or is it just a theoretical scenario where we see Americans investing a lot in European fintechs that kind of dream big?
I think the latter is very accurate. So if you look at Klarna as a very easy example, well, they got Sequoia as one of their biggest investors who got on early, and you can look at Truecaller, who just IPO'd, who also had Sequoia and Kleiner Perkins and others as investors. I have very few unicorn. I don't think I have a single unicorn examples that don't have American capital. That's actually a very good question. Can you think of any unicorn without American capital?
Do you count SoftBank? I guess they have made some investments. Not sure about European fintechs, but
okay, that's true. So SoftBank might count as a US investor in their thesis.
Yeah.
But actually, talking about the investments and the unicorns and some of the obscenely large amounts of money that we're seeing being invested in some of these funding rounds. Very recently, we've seen some very large numbers. I'm going to show my age here now and say that I can remember going through the whole .com bubble, right? I was working as a young IBMer focused on the .com boom. And it was the similar sort of growth. I mean, we were talking large amounts of investment money lot of hype. It grew and grew and grew, and suddenly, you know, it couldn't be sustained anymore, and the bubble burst, and everything came crashing down. Do we see similarities with the current sort of fintech growth? Do we think we're going to end up going in the same direction, or have we learned from past mistakes?
Yeah, I think you need to look at this segment by segment. One example that I usually use is electric scooters. So the amount of money that got poured into Lime and Bird and Voi and everyone else, it's absurd. And I think in such a case, well, you hit the inflation point, like this is just a bubble. But in some industries, if you look at Northvolt, for example, the battery factory in Sweden now being built, I think there is 40 billion SEK so far.
Yeah.
And 40 billion, that's a lot in European measurements. So 4 billion euros. And those kind of world-changing disruptive initiatives, they need the big tickets. So if you want to change how the world works, you're not defining your success based on how much capital you raised, but you can define your ambition. And if you have a high ambition, the big tickets needs to remain.
Absolutely, yeah. So what's the next steps for Minna?
Well, I would really argue the American expansion as so high potential for us. So if we just look at the business impact that we have for the banking side, it's a heavy correlation with how much card you use. The more cards you use, the more back office calls and the more disputes you get. And there's one market in the world which has the highest ratio of cards per capita, which is the US.
Yeah.
So if we can prove that our model works there, you have a really good model. But in the end, how we measure our success is actually how many transactions we conduct on behalf of a customer. So currently we process 2.2 million cancellations per year. So we cancel 2.2 million subscriptions. That has an annual value of more than 500 million euros. So that's a lot of money that we save for citizens, for retail customers. So the more transactions we do, well, the bigger is our success in our definition. And the best way for us to reach a higher volume is to integrate with more banks, because that's how we get the distribution.
So plenty of room to grow for sure, both geographically and also finding completely new markets. But I mean, without kind of going into your secret roadmaps or anything, but what do you see as what's after subscription management? What's beyond subscription management for Minna?
No, we are deep, so we will stay in the recurring payment space, but we started with the cancel products to help consumers get out of existing subscriptions. I think we have a huge opportunity to do more things on the merchant side. So if we have an API connection to, let's say, Spotify or Netflix, or another easy example, we can send an API call to cancel Ville's account. We can use the same infrastructure to say, hey, reactivate Ville's account or pause Ville's account for 3 months instead of canceling. Or we can change the payment method when your card expires. So there are a lot of activities that you do with your subscription merchants during the lifetime of a subscription. And we want all of those events to happen on our infrastructure.
There's actually another side. I just realized this. There's another side to the whole subscription dynamic, which sometimes catches me out. And that is, you know, I've got a PayPal account and I've got some virtual cards with Revolut, and I've got some other payment mechanisms. And sometimes I've connected subscriptions to different payment mechanisms. So sometimes I worry about, you know, well, maybe I don't need this virtual card anymore from Revolut. I'm going to cancel it. But I have to go through that process of, but do I have any subscriptions connected to it? Will Minna sort of help me with that dynamic of matching these two worlds together?
Absolutely, and that was one of the examples that I just mentioned. So if you have a direct merchant connectivity, you can solve all of these cases. And there is a challenge on the market now that all of the payments are processed through the card schemes. In Europe, you're MasterCard and Visa primarily. And how this works today, if you would call into Barclays, for example, and say that I lost my Spotify password, what they will do is they will actually block your card from accepting payments from Spotify. So what will happen if you want to resubscribe in 3 months, 6 months, or 10 months? It will fail because the payment is still blocked. So the market is destroyed. It's flawed when you're reliant on the payment processing level. So a direct merchant connection would solve most of these issues.
Exciting stuff.
Yeah, I mean, the way we've been talking about subscription management and subscriptions in general today reminds me of, I mean, these are almost like digital relationships, right? So you kind of manage your relationships with the different services that you're using. And now that we're kind of defining a way for us to manage the monetary authorizations, the payment authorizations related to these relationships, I do wonder if there's going to be a data element sometime in the future here. So you're actually also able to manage who actually gets to see your data in these relationships and how that data is being used, and kind of moving on from the just payments into also personal data management, and whether there is an overlap here with these types of services. I'm fascinated by this digital relationship and the definition of how to manage those relationships in the future. So yeah, it's a really interesting space moving forward.
Absolutely. But guys, we are slowly running out of time. As always, we could go on for forever, but we are rapidly running out of time. As I said, I just remembered, Ville, we can't have an episode without a joke, right?
Oh, yeah.
So do you want to do the honors this time and share a good joke with us?
Yeah, sure. I think it's the first time this season actually I get to tell a joke. So it's kind of an overdue one. So let's go for it. So Paul, did I tell you that I recently got a 5,000 euro loan that actually I didn't want from my bank?
No, I think you neglected to tell me that, Ville.
Yeah, and all I told the bank sales guy who called me earlier was to leave me alone.
Oh, it's good to be back to the good but bad jokes, right?
That's a Gothenburg humor right there.
Oh, thank you, Ville. That's lightened up the mood for the rest of the day. So thank you for that. But
no worries.
Coming to the end of the show, Joakim, we would like to give you a chance to let our listeners know how they can find you, get in touch with you if they want to know more about Minna, or just say hello and welcome you to the US.
Absolutely. So if you're looking at career opportunities or just sharing experience, or if you're working for a financial institution or a merchant, feel free to reach out. So our email is joakim@minna.tech, or if you simply want to read more, it's minna.tech.
Fantastic. Thank you, Joakim, for joining us on this episode of Fintech Daydreaming. It's been an absolute pleasure to talk with you. Learned an awful lot about subscription management, learned an awful lot about Minna Technologies, but also the whole dynamic of being a fintech and a startup in the Nordics and what you should be focusing on going forwards. I hope our dear listeners have enjoyed this just as much as we have. And to our listeners, as always, thank you for sticking with us. Thank you for helping us to grow the podcast. Thank you for all the emails we're getting and suggestions on future subjects and guests. We've got a really interesting episode lined up quite soon, looking at the whole domain of regulations. So that will be a really interesting one. As always, please hit the like button, the subscribe button. Continue to leave us messages and comments, because the algorithms love those comments. And Ville and I will be back in 2 weeks' time with another guest and another episode. This has been Fintech Daydreaming.
This is Fintech Daydreaming.